Please, I want you guys to pay attention to this. I want you guys to pay attention to this because what we are learning tonight alone is even enough for you to be profitable in the market. Is the main key to binary trading. This is the main key to binary trading. Any indicator anybody is giving you, any strategy anybody is giving you, without this thing you want to learn tonight, you can't really be, you might be profitable. Like I said, however strategy without the marking up is actually profitable, but maybe like 60 to 70%. But with this alone, you can be 70 to 80% profitable even without any indicator. So it is a very key thing to know in binary trading. It is a very key thing to know. Normally, if you type marking up tutorial, maybe on YouTube, the marking up you will see, obviously, is them telling you to go to this daily time frame. Do we all understand that, okay, this is Euro JPY, this market that is going up, that means the Euro is strong at this moment. That's why we are having an uptrend, and the JPY is weak. Now, you don't need to stress yourself in binary trading, right? You don't need to stress yourself with what the other days, the candles for the other days is saying. We are small time frame traders. So the only thing you're concerned about is the day before that present day you are trading and that present day you are trading. I'll repeat that. The only thing we are concerned about is the day before and that present day you are trading. Now, what do we need from the day before? This red candle right here that you're seeing is the day before. This small candle that you're seeing right now that is still indecisive is the present day. Now, that means we only need this red candle and this green candle to do our markup. Every other candle, we don't have business with them as so right now, because we just want to like get into the market and get out within little time and make our money. We are not staying long. The only time you will be concerned about what has happened earlier, maybe last week and everything, is when you are doing traditional Forex, whereby you have to spot Forex trading, whereby you have to enter a trade and wait for days for it to go your way, hours, you know. Some people do scalping there too, but they still have to wait for the time the market is slow. But we are time-based, we have time limit. If you enter a 5-minute trade, in 5 minutes, if the market does not go the way you predict, you lose your money. That's why we have to be extra careful. So now, the red candle the day before, right? Now, what we need to do with this is very simple. We put our horizontal line, which is what we are going to use to mark up. We get the upper wick. What is called a wick? Now, if you see this red candle right now, it has a body. That's the place that is wide at the top and the place that is wide at the bottom, right? Then there is one thin line at the top and a thin line below the red candle. So now, what you do is you use your horizontal line to get the wick at the top of that red candle. That thin line, where that thin line ends at the top, you use that thin line, you get it. You put this horizontal line at that particular place. Then you get another horizontal line. The one at the bottom as well, you get it. I hope that's straightforward, right? The thin line at the top, it is called the wick. The wick at the top, where it ends, you put your horizontal line there. Then the wick at the bottom, you put your horizontal line there. That's the day before. Now, you can change the color of the one below to blue. Why? You know, we call the one at the top a resistance, and normally we represent that resistance with red color. and we represent the support with blue color. You can choose any color you wish to represent yours with. But the most important thing is you understand that the line at the top is the resistance, the line at the bottom which is the support. So now what is the next thing we are going to do? You get the body of the red candle again. What do we call the body? The place where that candle is wide, where that thin line at the top ends before that body, you get that place as well, which is where you can see me getting right now. So that of the top, you change it to red as well. Then you get the bottom one as well, which is this place. So now what are the two things we just did? The wick at the top, we put the horizontal line there. The wick below, we put the horizontal line there. Now, the body at the top, we put the horizontal line there. The body below, we put the horizontal line. Now, if you can look clearly right now, the body at the bottom is where the body of the present day started from as well. Normally, if it's not starting from the same place, we have to get the body of the present day as well. But since it's the same, that line is working for both. Because what we are to do is this. The day before, you get the wick at the top, you get the wick at the bottom, you get the body at the top, you get the body at the bottom. And the present day as well, you get the wick at the top, the wick at the bottom, body at the top, body at the bottom. We move on. Now, before you even start marking up, I want you guys, I hope we all have trading view, because that is where you are going to do your analysis before you trade. This is where you do your marking up and analysis. You just go to your broker's account to take your trades. So now you have to have your trading view and have your setup, your indicators and everything. There's no strategy I'm teaching that won't give out the indicators and the settings. This Evan strategy that I taught yesterday, I gave out the strategy, the indicators, and the settings. So when the video is out, you can check that. So now, the time frame that you need for your marking up, for those that are jotting down, you need the daily time frame, the 4 hours time frame, the 1 hour time frame, 30-minute time frame, 15-minute time frame, and 5-minute time frame, just like you see it right here. For you to know how to do this and pick the ones that I just said, you just need to press this down. Then you start those time frames that I mentioned. The 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, and daily. They are just 6. Those are the ones you start. Once you start them, they all stand there by themselves. You don't need to click this all the time to pick them up. They will be there. So you just click them when you need them. So after you've marked up the wick at the top and bottom of the daily and the body at the top and bottom, you come to the 4 hours as well. So now you can see from the 4 hours what is happening, right? Nothing much is happening. Now you come to the 4 hours. Now at that present 4 hours that we are seeing to the left, I want to be slow here so we get this. I want us all to get this. So now, the only thing you are looking for on the 4 hours is the 4 hour candle, present 4 hour candle, and the one before. You get the wick at the top, the wick at the bottom of both as well again. So now, we all can see this wick of this red candle right here. We get that and make it the red because it's still a resistance is at the top. Now, the wick at the bottom of the present 4 hours is actually aligned with this one that we've done before, so we don't touch that. That's all we do on the 4 hours. We check for the wick again. Don't worry, after this, we'll still be marking up every time we're having a training session. So, but as we mark up all the time, you tend to get more about the marking up. So now, what do we do now? You come to the 1 hour. Now, everyone can see that just from us getting the wick at the top and the bottom, this has already shown you all the support and resistance that you need in the chart. We all can see right now. Let me start from here. You can see this market coming up here. Something pulled it back here. That's what we call the resistance. It went down. Something pushed it up. What pushed it up is what we call the support. It went up again, broke this resistance. Something pushed it back. So there's another resistance here, right? It came down, but by the time it was trying to come up, the former resistance that was here pushed it down again before this one broke it. Now this resistance here now turned to a support here. When the market was coming down here, it now pushed this up. This one that was the resistance here again, when this market broke it here, it was now a support here as well. One thing about resistance and support is, let me use this example for those of you that are here. It's like a ceiling and the floor. The market will always move between the ceiling and the floor. Once the market gets to the ceiling, the ceiling will push it back down to the floor. Once it gets to the floor will push it back to the ceiling. Now, one thing must eventually happen. It can just be longer, no matter how long it takes. When the market is moving between the ceiling and the floor, it will eventually break one. It's either it breaks the ceiling or it breaks the floor. The moment it breaks either one of them, if for example, if it breaks the ceiling, that ceiling that it broke will immediately turn to the new floor. It's no longer a ceiling because the market has broken it. Instantly, when the market breaks that ceiling, it will go and form another new ceiling. A new ceiling will now push it down. When it gets to the former ceiling that was broken, that former ceiling will now turn to a new floor that will now push it back up. Let me show you an example of what I just explained right here. We all can see right here that this was a ceiling, right? This line right here that I am hovering on, it was the ceiling. It pushed this market down here. This was the floor. This market, let me change the color so you get it. This particular line right here, it was a floor around this place. So when this ceiling pushed this market down, the floor pushed it up. But this particular candle broke that ceiling. Now, and a new ceiling was formed, which is this red line here. Now, when this new ceiling now pushed the market back down, the former ceiling that was here, that was now broken now, it is now a new floor. So it's no longer a ceiling at this particular time. It is now a floor. It was now the one that pushed the market back to the ceiling. Now check something else. When this new floor now pushed this market back, it broke the new ceiling again, this new red ceiling. When I told you once it is broken, it should turn to a floor, right? Check something out. A new ceiling was formed. This is our new ceiling, right? Which pushed the market back down. Now check what this new, our former ceiling that we were calling the new ceiling before. It now turned back to what? A new floor. So it is very simple. The market will move in between the ceiling and the floor, but one of them will eventually be broken. But instantly, when one is broken, it changes instantly to the other one. If it was the floor that was broken, that floor will change to a ceiling. I just used the ceiling and the floor, for example, for you to get it. Like for example, like in a house, you have the ceiling and the floor. So just imagine the market moving in between the two and breaking one, changing that one that is broken to the other one. That's just the movement of the market. So now what we are doing with marking up is just getting all the ceiling and the floors, so that when the market comes around those ceilings and those floors, we take our own trade, because when the market is moving to the support, we know what the support does. What does the support do? It pushes the market up, right? So immediately once the market is around the support, we take our own trade. We take a call. expecting that support to push the market up. Now, with the aid of our other indicators like this ever strategy, once you have your markup, the market is around the support. Ever strategy too is telling you that okay, this market is oversold. It will even give you more confirmations to take your call and you play your trade. So it's as simple as that. So now we all can see right here, this was the support here. But when the market came here and broke it here, see what is happening now. It is now a what? A resistance. You can see it is pushing this market down right now. Meanwhile, when it was here, it was pushing this market up, but it was already broken here. Now it is a resistance. So now, eventually, we know that this new support right now here, it will eventually be broken too, which will now turn to what? A resistance. So that's just it. It's a very simple concept. The market will always break either support or resistance and change it to support and resistance. That's just it. So now, we are in the 1 hour. What do we use 1 hour for? We use the 1 hour to know the trend, if we are on an uptrend or a downtrend. So now you get your trend line. You get your trend line. So we'll do trend line tutorial on its own, but I'll try and explain what trend line means too. Trend line is just like support and resistance as well. But the only difference with it is it's not an horizontal line, it's not a vertical line, it's a diagonal line trying to get 2 or 3 points where the market has been rejected. You can see when the market got to this line, it was rejected, right? When it got to this line here, which is diagonally straight with the former point of rejection, it was rejected again. When it came near the line again, here again, it was rejected down. So that's what we call a trend line. So now when you have this kind of trend of the market going down, it is called a downtrend. So right now, this market is on a downtrend on the 1 hour time frame. We know it is on a downtrend. I don't want to go too fast and I don't want to use terms that will make it complicated for you guys. So I'm trying to go as easy as I can. Don't worry, this won't be the only class about marking up. We'll still always mark up every time once we have a session. So you guys will get used to it. Then I will even advise you guys marking up and showing us so we can correct whatever we are saying that is wrong. So with time, you guys can be perfect with it as well. See, the main key to binary trading is your markup. Once you get your markup straight, I'm telling you, the remaining thing you need is not much anymore. Your problem is already solved. That's just it. Once you can perfect your markup. And one funny thing about markup is we can't all get the same markup, no matter how you try. But the moment you know that your markup is, you mark up a chart right now and you saw the market come to that your line and it was rejected, you will even be happy in yourself that, okay, I got that line. I got that the resistance, I got that support. So the most important thing is making sure that your markup is working for you. Most of the time, some of my students that we already trading before, we have our line at the same places. It happens. And at times, maybe my own line might be at 560, theirs might be at 565, or maybe 1, 2, 3, 4 point difference. You get it happens. So if you have 560 and I have 565, it doesn't mean we are wrong. Our markup might be different at times. But the most important thing is your markup is working for you. You are marking up and you are seeing the market respecting your markup. That's the most important thing you have to take note of. So let's continue with this markup and see what we can get. So now we've gotten our trend. on the 1 hour, we know we are on a downtrend, right? So we'll come to the 30 minutes. You can see what we have, right? We know this was the support before, but now is the resistance. It's pushing this market down. So now if this market comes back to this line, what do? We take our sell 3 minutes, 4 minutes, 5 minutes, depends on what works for you. But we can see right now, this market is live. We can see that my trend line that I just drew right now, right? You can see the market pushing the trend line, pushing the market down on that line, that I just draw right now. So trend lines are important. At times you will see your trend line and your support or resistance at the same spot. It will even give you more confirmation, more assurance that okay, if you take this trade, you know you are going to win it. So we can nothing. I'm not saying anything much on the 30 minutes. Or you come down to the lower time frames to do it, see if you can see more support you didn't get, so you can get there or resistance. But right now, the only thing I am saying that we are not getting, I'm not even seeing anything yet. So we'll come to the 15 minutes. So is it getting clearer now? We all can see that we are getting closer to the 5-minute time frame where we are going to take our trades. Then you always note that you always correct your support and resistance as you go lower. Because while on the higher time frame, you might miss the exact spot where that resistance is actually happening. So once you get low to the lower time frame, you tend to see it more clearly. That's when you correct it. So you correcting the line as you're going higher is not a bad thing. So as you can see, it's getting more clear as I'm doing it. So then you come to the 5 minutes where we have taken our trades. So we can also we have our rules and ceiling set up. All we are waiting for is the market to move to either our roof and our ceiling. Right now, we can see the market at our floor. Rather, sorry, not roof and ceiling. I mean the ceiling and the floor. We can see the market at our floor right now. What do we do when the market is at the floor? We take ourselves. But I wouldn't take this our buy, but I wouldn't take this buy. You know why? Number one, we have a trend line that is pushing the market downward. Number two, which means we are on a downtrend, right? So that alone, I don't like trading against the trend. It's better, it would have been better if when the market was at this resistance was when we were here. So it will be more confident. You will have more confidence in taking that sell than you taking the buy. So I want us to see something. I'm actually going to take this buy. If it comes down to the 273, I know it's going to respect it, but it's not going to respect it for long. That's one thing about going against the trend. Once you know you are against the trend, be careful with going for a rollover, because that market is not going to be rejected for long before the trend continues. As I was saying, so once, oh, okay, I want to show you guys something. It's not actually there yet. I will show it, but we can see that our support right here, the market is not yet there, but it's actually reacting to a support that was there before right now. It's actually reacting to it. So that is what we call marking up. So what I will do right now, is I'm going to choose another currency pair. We are going to, I'll mark that up again. So maybe when I'm doing that, maybe some things you didn't get in the first one, you can get in the new one. So I'm going for Euro USD right now. I want to teach what I am doing. You can see it's actually pushing the market up. Okay, now it's now at the support itself. Let's see. It's rejecting it already. Can you guys see the way it spiked down to that support and the support pushed it back up? That's the floor reacting. That's the floor reacting. It's possible we take the trade and clear. As you can see, it's actually pushing the market up right now. And it can even give a chance again. But it's against the trend. So it's risky. It's a 50-50 game. You know, it's more better when you are taking a sell right now. You are playing a 80-20 game, but you going against the trend, you are playing a 50-50 game. It came to that line twice and it was rejected. So that's the support at work. That's the support pushing the market back up. That's the work of support. If it's a resistance too, you see the market being rejected with the resistance. So that's just it. We have people that are doing this binary, they don't do any indicator. All they do is the support and resistance, and they take the trade at those levels, and they are really profitable. Really profitable. They don't use any indicator, they don't use anything. You can see the market is actually up. You would have played that trade. So it's as simple as that. I wanted to show you, I wanted us to take it live, but my Iqcent is not really loading. I don't know. You can see that push up, right? It's actually coming back to the support is just pushing. And the one other reason why I don't like trading this time is because you see a lot of spikes in the market over and down. So it will be very slow. It will give your brokers advantages of spiking you out, spiking you in, all those things you get. So I don't really like trading. Imagine now, see this market on the trading view going up and down. Now imagine what the brokers will do with this kind of opportunity. Just imagine what they will do with this kind of opportunity. This alone, let's try and see. I want you to see the kind of spikes you see in the market right now. With this you are seeing here. So I don't like trading this type of market. I don't like trading spiky market. It's not my time. That's why I trade in the morning. Do my 5 trades, 2 sessions, and I'm done. 10 trades per day, and I'm done. Once you get your daily target, you close the market, you close your laptop, because what happens is you give whatever you get back to the market. You give whatever you get back to the market if you don't go with your thing. The brokers are kind of slow tonight. I don't know why. Okay, this is what I was saying. Come on, close now. You guys can see, right? See the kind of spikes that we're having. See the kind of spike. The market is at 328 here. And if we check the stuff, you see we have 287. We have 287 on trading view, and on the broker we are having 328. So the market is actually somewhere down here, but they are pushing it up. Maybe some people are actually in the trade right now who they are spiking out. So I don't even like trading when the market price are not correlated at all. I don't trade around that time. I don't. Because whatever happens, you can't blame anybody. Anything can happen. It's just like you're gambling with your money. But we can actually see the support pushing the market up. That's how I trade. I don't use any indicators. If I'm using any indicator, maybe I'm using a support and resistance indicator. Let me even show you the markup I use to take the trade. This is my markup. This is what I use to take trades every day. This is my markup. And the only thing you can see there, maybe the blast that you're saying there is just the blast. Maybe when the market is indecisive, it gives you a notification, okay, this market is trying to reverse, is like kind of weak here. So once I see a blast, I know that, okay, maybe the reversal is going to show to be around the corner. That's just a blast. Every other thing you see there are lines and they are support and resistance. So the indicators generate automatic support and resistance lines for me. But that doesn't stop me from doing my markup first. So if I see this indicator giving me a support maybe somewhere, my own line is at a different place, maybe close to it, I will wait for my own line because I trust my markup more than an indicator. An indicator will not always work all the time. But I just have it there at times. Maybe I'm in a hurry. I just see a perfect setup like this kind of strong resistance here. So when this market was rejected here and came back around this place, if I see this kind of market, I will take that sell. But you can't see any stochastic or whatever. I'm not using any of that. I do my trade based on my markup. But that doesn't necessarily mean it should be your own style as well. That's why we are treating as many as possible strategies that we can have. This is the web slinger. We'll take that to one of these days. I'll teach you how it works, what you need to wait for, and how you trade it. Web slinger is a trend following indicator. It's a trend following strategy. It works when you have a full trend, not a consolidating market. When you have a trend, a high volatile market, when a currency strength of one pair is really strong than the other. Maybe the GBP, like this downtrend that you're seeing right now, the GBP was way stronger than the euro. That's when the web slinger works best. So this is one. Then I think I have no, this one is just like Evans. You see, I named it Evans trap. It's just like an Evans indicator, but I added support and resistance to it, which is what I wanted us to do. It's the Evans strategy, but I added the support and resistance indicators to it. So that is that. Then I have a cash trap strategy. This one is the cash trap strategy. It gives you the arrow and every other thing there. So we treat them one after the other. So you now do your study. You trade with each of those strategies until the one you have more wins with. Once you have the one you have more wins with, that will be your strategy. It's as simple as that. You don't necessarily need to do support and resistance strategies like I use. You don't have to do what I do. What is working for me more might not be what will work for you more. So that is that about the strategy. So can we guys see how this support is pushing this market right now? Can you guys see how that support reacted? That's what we're talking about. You see that push up. That's it. Let me just do one more markup. So we'll treat that, and so we will take adding your markup with Evans strategy tomorrow. Then we'll do more markup tomorrow. I want us to take one strategy at a time and get and be perfect with it before we take any other one. So that means we'll still do some markup tomorrow. We'll still do some markup tomorrow. So you can see how the markup is more. Okay, now I'm on the daily right now on Euro USD and I want to mark it up. You know, I told you we start from the daily. This new candle you're seeing here is the new candle. It's today's candle, and it has not even moved yet today. You can see the distance that candle has made today. It did not even move at all. It's just like indecisive, and the day is almost over. So now what are we doing? We don't have a week at the turn of the day before. We only have the body, so we get that body, right? We don't have we have a week at the bottom of the day before, so we get that bottom. We change the color. Then we get the body of the day before as well. Then we have a week on today's candle. That's just what we have. We only have weeks and we don't even have anybody. So we get that week as well. Then we go to the 4 hours. You can see what do we do on the 4 hours? We get the week of the 4 hours before as well. So we get this, we change it to red. And we get this body as well too. Then we can get the body of the candles below as well. This body is here. This body here, running. We change that color. So basically all we do is get the wicks and the body, wicks and body. That's all you do. You don't need to strain your eye to look at one thing or the other. That's all you do. You know, I told you on the 1 hour, what do we do? We get the trend, right? So you pick up your trend line, what's the movement in the market right now? You can see it's actually moving down. So we get that movement down on our trend. We get that movement down. So we already have the movement that we need. We come to the 30 minutes. What are we seeing? You know, I told you as you go to the lower time frame, that's when you now adjust. You see the clearer picture. So now, so far, we are getting it. We come to the 15 minutes. I did not say anything on that 30 minutes. So on the 15 minutes, we got this support perfectly. We got this one perfectly, but it's no longer a support, right? It is now acting as a resistance. So we change the color to red. We can see right now, it was acting as a resistance here. It was broken here, now it's acting as a resistance again. If we go to the back, you can see it was a resistance there, but it was a support right there. But now, presently, is a resistance. So this one, we bring it up here. It was pushing the market down here. It was pushing it down here. And that's just what we can see. Is there any other thing I'm missing right now? No. So we'll come to the 5 minutes. And we can all see what we have. We have the present resistance, the next one, and the next one. It's as simple as that. It's as simple as that. So once the market, we can see presently the market came to this resistance, present one, and is pushing down right now. You see that red candle coming down, the resistance is pushing it down. Just imagine, let me show you something. Imagine you saw that this market was rejected here. When it came back there, you took a put right here. Maybe you got it. It came back here again, you took another put. That's two, right? Now, notice something. This was a support here, support here. So a support here. When it came here, if you took this trade, you will win it because this market went up for a while before this one came back to break it. Now, when immediately it was broken here, it turned back to a what? A resistance. It was a support here before, but now it's a resistance. It's now the one pushing the market down. It was broken here, now it's acting as a resistance again. So you just taking the trade at the point of support and resistance alone now, you will be profitable. You just adding it to a strategy will make you more profitable because you now have to filter some things you might not need. You will filter some trades you might not need because you might not be sure of them. Maybe the strategy is telling you is not ready yet. Maybe the stochastic RSI is telling you it's not overbought or oversold yet. So you wait. Like I said earlier, those who are patient to the market are the ones that get the money from the market. Those who are in hurry will eventually give to the market. They will just give all what they have to the market. And yet, every day will not be profitable. You won't win every day. There will be some days that will be bad. There are times that it's the market itself that is just moving differently totally for that day. So the moment you come, that's why I advise people, you trade with a certain percentage on every trade. Don't ever increase it. The only time you're allowed to increase it, maybe you double the account. So you want to increase the percentage you're going. Maybe you're going 2% per trade before. You now turn the $250 account to $500. So you might be like, okay, I want to change it to 3 or 4%. Because you have a bigger account now. So don't change it. So the days that are bad like that the trade are not going your way. Once you lose 2 trades after one another, you lose the first one, you took another one, you lost again, just close your laptop and go. You might go for like an hour, then come back with a fresh mind, check for another setup. Now, the reason why I said 2 trades is this. If you lose 2 trades, you are going 2% or 3%, that means you've lost 4 or 6% of your account. Right? If you come back and lose another 2, that means you have lost 8% of your account. If you have lost 8% of your account and you are done for that day, the next day that you come back and you are taking your 10 trades again, your target normally on a day should be like 8 to 10%. Once you hit 8 to 10%, you gain 8 to 10%, you are done for that day. So now if you got your 8 to 10% on Monday, you got it on Tuesday, you lost it on Wednesday, you got it on Thursday, you got it on Friday. If you had it up, you are still profitable that week. It's better than you now lost 2 trades. Now you're not trying to revenge trade. You're not trying to get your money back. You're not increasing your stake. Maybe you are going $10. You now went to like, oh no, I have to get my $10 back. You now want to go and put $25 or $50 in the next trade. What you will just notice is you are not trading with your emotions. Even the setup will not be ready. You'll be taking it because you just want to get your money back. And what will you do eventually? You just keep giving more money to the market. So learn to accept losses. They are not even losses, we call them lessons. Learn to take them as okay, it's part of trading. There are days that you will be profitable. Once you know that you've lost 8%, the same amount you are targeting to make in a day, once you've lost it in that day, just close the system and just take that day as a losing day, a lesson day. The next day you make your 8% back. It's just like, okay, I lost my money yesterday, I got it back today. Just see it that way. So you have to learn that discipline. It's not easy. See, it's not easy for someone not to blow an account. When I started this thing, I grew an account of $40 to $500. So actually, I was using risk option then. I grew it from $40 to $500. And normally, I deposited $250 because they don't take less than $250. So I actually lost that account to that $40 before I now started that discipline. That was that point where I was not like, no, this thing is a mind game. I was still learning then before I mastered all this. So I was like, this thing is a mind game. Let me just stick to something. I now started with the 2 to 3% of $40. I grew that $40 to $100. From $100, I grew it to 200. I shall grew the account to $500. Now it got to $500. You won't believe that I thought I have overcome that. I thought I overcame that spirit of greed and I was already disciplined, but I wasn't, because on a single day, within 30 minutes, I lost $500 to the market. How did it happen? I just started that day with my normal percentage per trade. It was like a movie to me, sir. It was like a film. I didn't believe it. I was like, wait, what happened? I started this. I opened this broker now, and I'm seeing $500, and now my it was unbelievable that day. So this market is tricky. It is a mind game. To play that game with you, you just have to be disciplined. It's not easy. That's why they tell you just close that laptop, because if you don't, that temptation will come, no matter how strong you are. You just, if you say, okay, I won't take any trade again, I'll just be scrolling through. Maybe no matter how good the setup is, I won't take it. See, you won't know when you enter the market and take it. That's why it's just good to just move away from my laptop. So I lost that my 3%. Then I now saw another short trade. I was like, this is a chance to make my 3% back. So I increased my. I lost that one as well. I increased the next one again. I lost it as well. Before I knew it, I have lost about $75. How will I lose $75 in a day? Next trade, I just put $250. I want to make my money back. The most funniest part is I was taking those trades on a single trade, a single pair that was just going against me. So when it gets to the next resistance, I will not take an higher risk and go into the market again. And this market kept going against me. And there was no news. The volatility was just high and it was just going in the wrong direction that day. All the resistance that it was meeting, it was just breaking there. And so as it was, for example, let's just say maybe it got here, I took a trade, it now broke it. So as it was getting here, I now took another one with higher risk, it broke it again. The next one, I took it again. Before I knew it, my $500 account was gone within 25 to 30 minutes. I just sat there, I didn't know what to say. I was like, I thought I have conquered this. I thought I have mastered that discipline, but no, it's something you have to fight every day. It will come at you every day when you are with your system. See, the moment you open your market like this, that spirit in the market is looking at you as well. So it will always come to your mind, playing that mind games with you. It's left to you to. It's not something you fight one day you win, then you think you have won. It will come back. So you have to be disciplined every day. That's why we stick to making a certain amount of money and closing your system that you are done for the day. That way, that temptation will not even have that opportunity once they are off the market. Or losing certain amount of money and you are like, okay, I've lost how much I know I can lose per day. And you close your system and you walk away. It's just a simple strategy. Just stick to it and you will see at the end of the day you are profitable. But if you are chasing the market or you are trying to invent trade, it will only lead to more loss.